going on? What's going on?
Chris, what's up? Good morning.
Yeah, man, I just came to gloat a little bit, just letting y'all know about SMCI doing well. It's good.
See, when you take a victory lap like that, when you gloat, people want it to drop on earnings. This is the problem.
I know.
This is the problem, Chris. Now people want this shit to tank.
I know, which is fine because I'll buy more of it.
Okay, so let's talk about that first. Why don't you give me a little bit of the, in a nutshell, SMCI thesis? Why are you so bullish on it?
Okay, so one of the things that we've been talking about this in our private group. You have to read the short report and figure out what are the main complaints about SMCI, and then you take it to current business, and then you ask yourself okay, what are we actually dealing with? Are we dealing with real fraud where things are going to go to zero, or is this something that's like a temporary or a short-term stain that could be removed in the future, right? So if you're a complete fraud, that's one thing. People will acknowledge that, and those frauds will, eventually make its way into the numbers, and eventually you'll get pummeled because your product is not really real. It's vaporware, right? So if you go to certain pharmaceutical companies, pharma companies have this tendency to overpromise on how their drugs are going to do, but then when the trials actually come out, it ends up being completely false. So if you look at the Theranos of the world,
you say Theranos? It's Theranos.
Yeah. Theranos, whatever.
You just pulled in a mitt there on the pronunciation.
You actually had to correct me for my pronunciation.
Yeah, that's how you know it's bad, bro.
How the world is flipped, right?
Yeah.
Okay, so yeah, things like that. Or Berkeley Lights was another one that overpromised, and then they ended up getting knocked out. So the key is you have to look at this short reporting from the angle of what is their main complaints. One of the chief complaints that Hindenburg came up with was that they are recognizing the revenue aggressively. So basically, a lot of the growth that's we're seeing in the numbers, it might not actually be as accurate as what's actually out there. In the past, they had a similar finding, and that similar finding ended up, being hey, look, if they did it in the past, they'll probably do it again in the future. And so that was one of Hindenburg's, one of their chief complaints. Now, they're in hypergrowth mode, and you can see how crazy they are when it comes to building out the data centers and infrastructure. They're one of the core suppliers for this AI infrastructure play. So the question that we all have to ask ourselves is, okay, is aggressive accounting something that could be fixed? Absolutely. You get the new auditors that are coming in there that can say, look, these are the processes that you used to follow. And, there's a little bit of questionable practices here, but let's change it up. Let's actually utilize a new accounting standard, and we'll recognize revenue based on X, Y, and Z. That's a little bit more favorable to what investors expect and the SEC and everyone expects. And, if we have to restate some of our revenues, we'll restate our revenues. But the thing is, they're in hypergrowth. So yeah, if they have to basically restate a few percentage points, oh yeah, we didn't grow 100% last year. We only grew 89%. Who gives a F? The stock is down 80% from the highs. So it's dude, it's easily something that can be corrected, even if it's restated. The product is actually there. It's flying through the roofs. Flying through the shelves. You can actually see data centers and everyone adopting these things. And
what was your reaction to the 500 billion Stargate thing, and what implications do you think that has on AI capex writ large?
Well, it just goes to show that AI capex is not slowing down anytime soon. Whether that be the next, and this is a 4-year spending cycle. They're talking about spending 500 billion over 4 years, right? And that's outside of the other hyperscalers already doing it. And something I mentioned yesterday, inferencing is where these guys are going to be making a crap ton of money, right? So think of the current data center. I have to explain to people how these cloud hyperscalers, they are the modern day real estate. They have a modern day real estate kind of investing framework, right? So what happens with real estate? You buy a plot of land, you build a building, and then you rent out either homes, offices, whatever. These guys are doing the same thing, but they're doing it in the digital space, where Amazon, Microsoft, Google, they're buying up data, they're buying up land, putting up data centers, and then renting out the compute. Right. And the thing is, the demand for that compute is insatiable. With real estate, regular real estate, you're limited by the number of population that's growing and demands for that. With compute, it's like an unlimited runway. Like, I don't even see an end to a runway. Can you see an end to a runway where we're going to be like, oh yeah, you know what? Maybe we're not going to use as much compute.
I don't, but then I have a question. Why would you buy SMCI over NVIDIA if you believe in that?
Because the valuation.
No. But NVIDIA, you don't think, if you think the runway for compute is endless, NVIDIA is going to 200 like that, like, unless you think 150 is the top for NVIDIA, which
no, it's just a valuation thing, man. Like, the valuation on SMCI is super undervalued right now relative to its importance in this AI space. NVIDIA's valuation makes sense. NVIDIA, like, if you want to market perform, you buy NVIDIA. If you want to outperform, you buy SMCI, because SMCI is sitting at a much, much lower value than what it should be trading at if they're able to deal with these accounting issues.
What do you think the fair value is? 50 roundabout?
I think it's like 75 plus, but then again, I don't know, because it's all about consumer trust, right? If these guys can rebuild the trust among investors, this thing will ride up again, So for me, when I look at it, I think trust is easier to get, especially if the AI hype cycle is real. So, like, we have to remember, even if you're bullish on the company, you have to always weigh the valuation. And when valuations make no sense to the downside, you should be buying. You really just have to go back to the philosophy of buy when people are selling and people are, like, scared.
Well, hold on. So Jed has a good question. Why weren't you buying SMCI at 17 then?
I didn't do enough research on the short report. I have a limited amount of time where I can do all this stuff all the time.
No, that's fair. That's fair. I'm just saying, like, at 30 is like, what piques your interest is what I'm basically trying to get at. How did this randomly?
You're never going to nail every single bottom. You're never going to nail every single top. You're never going to nail every single company. And sometimes things fall off your radar. And then you look back and you're like, wait a second, this should have been on my radar to begin with. You know? So I'm only human, dude. I only got 24 hours a day. I got a wife and I got other things going on. So, and the whole thing is, this is why I got bullish on it. Someone brought it up to me and said, hey, Chris, have you looked at SMCI? Like, Ken brought it up on our conversation on our group chat. And I said, well, you know what? Let me take a minute and look at it. And as I looked at it, I was like, wait a second. Hold on. There's actually something here. Once they hired the auditor, their new auditor, BDO, and then, we spoke to a friend who is an auditor and said, look, this is probably not as big of a deal as people are making it out to be. And that's when you started to, like, adjust your thinking. So sometimes what happens is it's not necessarily just about, like, you need to know every single company that's going on and happening. You also have to know, like, sometimes the timing is based on the information that comes your way at the right time, So.
Yeah, and the point of my question is because the SMCI bulls, when they saw it go to 17, the ones who bought immediately thought the short report was bullshit, right? Just like any of us, if we're super bullish on it, like, we've had Palantir short reports in the past and we're like, all right, this is stupid. But for you, it wasn't really a revelation at that moment. It was more so randomly figuring out that, hey, there's this company out there that might be undervalued because of a short report. And then when you dug into the short report, you realize the short report is bullshit.
See, one of the things that I hope the community around they appreciate this fact about what you're doing. There are always great opportunities out there in the market, but a lot of times people are not pointing the finger in the right direction. And if you make friends with the right people, they'll point you in the right direction. And then you make the decision, of course, yourself. But the thing is, the more you surround yourself with great investors, the better you're going to do. So if you're investing basically as like a solo person and you're basically looking through everything, looking for opportunities, bro, it's a sad, lonely field, and you're gonna spend a lot of time doing research. But if you have a core group of friends that that they're great capital allocators, that they've done very well in the past, they have a great mind for finding things, bro, you surround yourself with those people and you find those great companies that can help you boost up. Like, here's an example, like Nubank. Like Nubank, I was really, really bullish on it when it was $3-4. And what's his name? Tanner, I actually went on FinTech Frenzy with Tanner and showed him, and he loved it. He went with it and he really did well on it. So it's kind of one of those things. Like, if someone doesn't point it in your direction, it's really hard.
It's why people at the meetup were so happy to meet each other, because they could actually talk about things that we cared about.
I still remember when I brought up things like cruise lines to some of my friends. Like, some of them will be like, "Are you kidding me? Like, are you stupid? Like, bro, this pandemic just happened. But then once I actually showed them the numbers, showed them everything, like, whoa, hold on a second. There's actually a lot of value here.
Yeah.
It's like, it's just, because what happens is we as humans, we have this tendency to just look at things at the surface level and basically make a judgment. And we don't look at the stuff underneath. And sometimes we're wrong, sometimes we're right. And it's our job to make, like, as investors, our job is to basically, find the people and the companies that we believe in, right? And then basically, if you don't believe in the person and you don't believe in their methodology, just, distance themselves. Because what's going to end up happening is they might keep you away from opportunities as well. So you have to keep yourself in a position where, you're finding people that have ideas that are similar to yours, methodologies that are similar to yours, but then also can help point in the same right direction. And trust me, there's value also in having friends that are critical about things.
Yeah. 100%.
So, yeah.
Okay, some rapid fire for you, Chris. Real quick. First off, is Netflix. Does it deserve a 13% pump right here?
Dude, Netflix is just on another level of growth. I don't know. I don't even know how they keep getting, but this is where I have to like kick myself a little bit and not understanding that the way that Netflix is that every incremental subscriber ends up lowering the cost basis on a per subscriber basis.
What do you mean by that?
Scaling laws are infinite. So here's an example. If you made $1 billion, like you spent $1 billion on a new TV series, like let's say Squid Games, right? Now, if you have a billion people watching it, that means that let's say it cost $1 per person, right? So the cost to you was $1 for that $1 billion that you got. Imagine on the other hand, now you have 2 billion viewers, but the cost of that series is still $1 billion. So now your profit just doubled, right?
Right.
You understand what I mean? So
right.
As you scale up, you become more profitable because the cost of input is going to stay the same or actually going to increase just a little bit. But the value that you're generating goes up by a lot. And especially now, if you're buying back a fuck ton of shares, dude, that means that your share prices, even if let's say your market cap ends up being stagnant, your share price is going to explode. And right now you're looking at the operating income, operating revenues that Netflix is generating. I would say this is something that like one of my friends who like, because I'm eventually thinking about doing something like a hedge fund or whatever. I was talking to him. I was like, what's one of the methodologies that like retail investors get wrong and hedge funds get right? And they're like, well, if your time horizon is only in like 1 or 2 years, your investing is going to be like 1 or 2 years out.
Right.
But if your investment horizon like 5 years out, you have to look at it from that perspective. So it's like, okay, how much is Netflix going to be worth 5 years from now? What's if you look at today's PE ratio and Netflix might look a little bit expensive. But if you look at 5 years out and you combine all the share buybacks, you combine all the additional growth, this thing could be worth a lot more. Right. And that's where I think Bill Ackman, he had the right thesis, but I don't know what caught him off guard and tilted him away from it. But it's sad.
Okay, next question. You said Microsoft needs to come down. It's up 3%. What's wrong with Microsoft?
Microsoft, for some reason, I always go back to that stupid earnings report where they came out and the first thing they did, we'd like to acknowledge that we are currently on land that used to belong to the Hopi, that used to belong to the...
Wait, they did that? That happened?
Yeah, dude.
When?
Yeah,
what quarter?
Dude, I think it was like a couple of... I think it was about a year ago or something. A year... Wow. Yeah, I think it was about a year ago. Like, dude, they were doing like land acknowledgements, and then they were like, every person would announce their pronouns and all those. And I'm just like, dude, like... Look, I'm all for diversity, equity, inclusion, all that stuff to a degree. But then, like you, if that's like one of your main focuses, you're gonna create a culture where that is gonna take precedence over actual innovation, right? So I don't know. Like Microsoft just rubbed me the wrong way.
You think that's a bear case though on Microsoft AI in general, or you just don't like the?
Nah, for some reason I've never seen Microsoft as like a very innovative company. I don't know why. Like they are innovative in some of the ways that they do their billing. I don't know if they're actually innovative in their products. Like I mean, Microsoft has this like crazy monopoly on like built on Office and Windows and all this other stuff. And they're basically the most innovative thing they've ever done is like, yeah, we're gonna bill you like $10 more for the family Microsoft plan. And I'm just like, fuck you, I fucking need Excel. Otherwise, like, get rid of all your shit,
Yeah.
So I don't know. And then, like, I mean, Azure was a good play on their parts of the moving to the cloud was a good thing. But, like, if you look at Microsoft, I'm not sure I see a lot of innovation for them. They don't take a lot of, I don't know. I mean, outside of ChatGPT and OpenAI, I don't even, I just, for some reason, Microsoft just doesn't seem like that big of an innovative company to me.
All right. So last question for you. The Qs and the S&P are at almost all-time highs. Is this toppy, or is this we're going to have another big year like 2024? What does your gut tell you on this moment?
I think you're just going to have to be very selective. I think there are definitely like bull traps out there, and you just have to be very selective. Like the last couple of years, you could have just been in the indexes and made really good money. But right now, I think the next year is all going to be about like value being, there's going to be companies that are going to do really well and companies that are not going to do well. And the thing is, I think we're going to have like an even out year. So maybe like, what Tom Lee was saying about a 10-year, 10%, up year. Now, what does that mean? That means that there's going to be companies that are valued really high that should be coming down. And then there's also companies that are valued really low that should be coming up, right? So this is where it's like a stock picker's market rather than just buy the indexes and hold. So if you go like 2008, 2009, you could have bought anything and you would have been up, right?
Yeah.
So stock selection wasn't necessarily the most important thing. And it was the same thing post COVID. Remember when COVID knocked everything out? You could have bought anything and you would have up, And then in 2022, it was like the mega caps were all low. So as long as you were in one of the mega caps, you freaking killed it. So I think this is one of the times where there's definitely like sector rotations out there. There's a huge underlying shift happening in policy. So some industries are going to benefit significantly from these Trump policies, and some might be dialed back. So this is one of those years where stock pickers will win, and index investors may not perform as well. And it's rare to see that anymore. Because now everyone just pretty much buys the index, and that's been like the methodology. But if your goal is to beat the indexes and all this other stuff, you also have to do a little bit of homework and figure that out.
Okay, actual last question for you. What are your top 3 positions right now in your overall portfolio?
Okay, so I have a ton of fixed income stuff that's just generating me really good returns. And you know what they are already. I don't have to keep relitigating that. But so fixed income is a big thing for me this year, because I feel like if rates come, will give me both the income that I want, but then also the capital appreciation, right? So that's one section. I have a ton of positions in Google, SMCI, Nubank. I have Next Decade, which is my super long-term investing thing. And then just a hodgepodge of other little things. I still have all my cruise line positions, which are doing really well. I'm hoping that the Decembers eventually come out, in which case I'll what is that thing called? Roll them forward. Because I still think like cruise lines still have a long way to go higher. So I'm just patiently waiting for that. Grab is a good position for me as well. The Grab is probably the most speculative among mine that I'm like, we'll see what happens. But then again, I also got a good price on it, so I'm not like too concerned with it.
Right.
SMCI, like in the short to medium term, is gonna be a big thing for me, because the way that things are happening with what I just explained earlier. And there's like a hodgepodge of other little things that like I have that, are pretty much just like things that I talk to my Patreon members about and stuff. And we just, whenever there's opportunities, I post it. And sometimes I've been a little bit like, I've been hit with a little bit of writer's block. So I'll tell people like, hey, listen, this is worth looking at, but I haven't like published a whole like data series of things that I've
a deep dive.
That shows, because that's what I do, right? I you saw like when I put in like the work on CCL, it was a lot of deep diving on there. It wasn't as simple as, okay, yeah, this is a good place to be. It was like, no, this is the reason why you want to be valued, why you should be in it. Same thing with like TFC last year. Remember that? I think I wrote like, I don't know, it was like an entire
It was a good 5 to 10 pages on TFC.
Yeah, and it worked out, right? It paid off so tremendously for people. Yeah. So I think that's the key. Like, there's some things are going to be very like detail oriented, where you have to like, you know, go in the nitty gritty of things, and other things are just going to be like, hey, look, this is the core thesis, and if it plays out, it plays out. If it doesn't, then it doesn't.
There we go. All right, Chris Patel, thank you very much. We appreciate you every day. We'll talk to you tomorrow.
Thank you, man. Yep. Have a good one. Take care.
You too. All right. So Chris's top positions are Nubank, Google, Grab, SMCI, and the cruise lines. Next decade, I think, is more of like a long-term play, but it seems like those are his top 5. Market's still green, folks. Palantir doing its thing, kind of just silently going up 3%, 75.44. Let me check resistance at 76 on Palantir. Obviously benefiting from that NVIDIA, Stargate, AI, capex spend that the market believes is going to be massive. 76 for Palantir is 68,000 shares. It's a decent wall. It's not massive, but there is a bit of a wall there. Again, guidance in a couple days or next week. That's going to give us pretty much everything we need to know in terms of the trajectory for Palantir. And I think they're going to guide above 30%. I really do. I think 2025, they're going to guide above 30%. The question is how much they guide above 30%, and that's going to determine a lot on where the stock ultimately goes from here. Yeah, the strength in Palantir has been pretty amazing, dude. Pretty freaking amazing. Like 63 looks like, at least for now, was the bottom. I think earnings will be the determining factor. If we get a dip because of the SARS miss, I think that's to buy the dip, because I don't think other parts of earnings are going to suck. I really think earnings are going to be very good. And if the headlines are Palantir misses 90% on EPS, which again, it happens, right? We've seen it happen time and time again in the market where you miss on EPS for whatever esoteric reason and the stock drops. I think that's a very easy buy the dip if that's the only reason the stock drops. If guidance is below 30%, I think we can get the stock to drop as well. I just don't believe they're going to guide lower than 30%. I personally don't believe it. I think it's going to be in that 32 to 34%, and then they're going to sandbag every quarter, and then end of year, I think they top out at 40% growth. So that's kind of how I think the trajectory plays out. And if so, that should be able to keep us in this range and continue to normalize the expensiveness of this valuation, and then eventually grow into the valuation in and of itself. NVIDIA right here, 146. You got ASML 779. Wow, hoodie still holding well above 50, 50.75, up 1.44%. I think it touched 50.80 at one point. So, I mean, if it holds this throughout the day, that's going to be 2 days in a row of maintaining the 50s for Robinhood. Nike recovering after Adidas earnings. Did you end up buying them? I did not buy Nike. I'm not excited to own Nike, to be honest. It's one of those things I don't want to look at in my portfolio and have to do research on them. The dividend's also not exciting either. Like, you're buying Nike because you think that there's a recovery play. That recovery max gets you to maybe 100, 110. But how long will that take? I think it's going to take a while. I don't think this thing's going to 100 anytime soon. And then it's a 2% dividend. Like, if it was a 5% dividend, I would get a little bit more excited for it. But I don't know. It's just not, it's not that interesting. The only other reason I would buy it is because of Bill Ackman, because he's like balls deep into Nike. But now I'm curious if he's still that deep into it or if he trimmed, and we'll find out in like 2 weeks, and we'll see if he's doubling down on this position. That's kind of crazy though, right? In this economy, to trim Google and to put $300 million or whatever into Nike out of all names, like with all the opportunities, the fact that he's doubling down on Nike to me has been very surprising. And I'm curious to see if he keeps going that route. Today could be the first day where we get a $50 open and a $50 close on Hood. The stars are aligning low-key. Yeah, I mean, they're executing. They're doing what they got to do, and the street's starting to really, really recognize that. ASTS right here, 2347, Microsoft 439. That's still up 2.5%. Is Tessie red? Tessie is going green. It was at 415. Now it's at 422, down about 0.5%.